What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we close at brand new all-time highs, and this bull market continues to roar on. The path of least resistance in this stock market is still up. First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we closed up over 1% today, and we did close at a brand new all-time high. We continue to defy gravity in SPY, and we continue to stay above this 5 EMA. This is a very strong bull trend, and remember that you want to let the trend be your friend. Don't be spending all of your effort getting frustrated at the market because it just continues to go higher. Just go with the trend, and if you're not sure what to do in this market, sometimes it's better to do nothing at all. There's still a lot of great trade ideas out there that I'm adding to the Stocks channel Discord, and there's still a lot of stocks that are down from their all-time highs that are seeing some really nice moves. So remember, you don't always have to try to trade the indices if you think they're getting too far extended. Go look for those laggards and go look for those good stocks that could be great trades while this stock market continues to be this bullish. You can see all these moving averages are still very strongly stacked to the bull side, and we continue to roar on in this bull market. We did blast right through that price target at $413, and we're well on our way to the next price target at $417. Because we're so close to $417, I'm going to give you the next price target to watch for. If we do close above $417, you're going to be looking for the next price target above at $421. But please remember, the higher we go without a significant pullback, the more risk there is to the downside. So don't get over leveraged at all-time highs. It's okay to trade the stock market, but don't be taking on a ton of leverage or buying weekly call options that expire in 1 to 2 weeks. Be disciplined and make sure you manage your risk. The risk is still defined down here somewhere around $407 and the gap close around $400. So those levels are still quite a bit lower, and it's possible we even close that gap and continue to go lower if we do see an escalation in the selling. Remember, you could get into these blow off top scenarios, although while they are rare, they are still possible because as you saw, we only get 1 day of selling and we're already going back up to new all-time highs. So this is an irrational bull market because we just continue to go higher, and eventually we could see a huge short squeeze and a huge influx of buying volume, and we could go parabolic, and that's when you know you're in the blow off top. So be prepared for a blow off top scenario, but don't necessarily assume that one has to happen. It's possible we just continue this stair climb up, and eventually we'll see the selling coming later. So the critical downside support levels I want you to pay attention to are going to be right around 407, the top of the gap at 403, and the bottom of the gap around 400. Also note that the 20 simple moving average is coming into that gap, and that will also be a very strong support level. On the NASDAQ 100 QQQ ETF, we finally met that price target above at $341, and we even exceeded it a little bit. So whether or not we're going to continue to hike higher without a pullback straight to 350 is to be determined. Remember, we're still on very low volume, so this is not a blow off top scenario just yet. We would still need to see a massive short squeeze and a bunch of FOMO buying coming in at the end. And if we get that parabolic move to 350, that's when you'll know you're in the blow off top scenario. So right now, this is just the stairs up, and we just continue to grind higher towards these price targets. Remember, now that we're starting to close above the price target at 341, it's increasing the probability that we're going to 350. Remember, I was expecting about 2 to 3 days of selling and a 1.5% to 3% pullback, and we still have yet to see that. We did get about a 1.2% pullback yesterday, but we saw no follow through with that selling, which really means it's not the pullback that we're still looking for. We still need to see about a 2 to 3 day pullback for this bull market to remain healthy, and right now, this continued climb to the upside without any significant pullback is not healthy and it's not sustainable. It doesn't mean we can't go higher. It just means that when we finally do see selling, it could be more drastic and it could be the elevator down. The critical downside support levels I want you to watch on the QQQs is at 334, 332.50, 330, and the gap close right around 325. Also note the 20 simple moving average is currently trading in that gap at 325, and that's the strong support level in this bullish rally. On the Dow Jones, we also closed at all-time highs today, and we're getting very close to the next price target at $341. We're still in a very strong bull trend, and we see the Dow Jones is not looking quite as parabolic as the S&P 500 and the NASDAQ 100. The Dow Jones is definitely taking the stairs up, and it's looking very healthy, and it's going up at a nice 45-degree angle. We also see a little more volume in the Dow, and we see a lot of strength in the stocks that are trading in the Dow lately, and they're more than likely going to continue this slow hike higher until eventually we hit one of those critical price targets that does trigger a correction. Right now, downside risk is defined in the Dow at these levels here at 337, the gap close at 335, and the next gap closes at 331. Note the 20 simple moving average is now above $332, and that's going to be the strongest support level in this bull run. On the Russell 2000, we did get a confirmation of that bullish breakout because we did get a breakout and a confirmation retest of the breakout trend line. So it does look like the small caps in the Russell 2000 are getting ready to go back into a bull trend, which is great news for the stock market, which means we could see those small caps eventually join this bullish rally. We now see all of the moving averages are stacked to the bull side, and we did get a confirmation breakout of that resistance trend line. So I'm looking for bullish trades on the Russell 2000 with resistance levels above at 227 and 233. Downside support is going to be a retest of this level at 223, the 20 simple moving average at 221, and the 50 EMA at 219. On the ARKK ETF, we went up 1.4% today, and we did get a price action close back above the 50 EMA. The ARKK ETF is by far looking the weakest, but it is slowly but surely trying to build back up a bull trend. We need the price action, which is more important than the trend right now, to continue to close above the 50 EMA at 126. You can see the trend is starting to get bullish, but all of the moving averages are still trading below the 50 EMA. So we're not in a bull trend just yet, and we need confirmation price action closes back above the 50 EMA for a few days in a row. Upside resistance is going to be 132, 139, and 143. Downside support is 126 and the 20 simple moving average at 121. On the VIX, which is our fear indicator, we continue to see the VIX going lower. Remember, the VIX is a measure of fear, and the lower the VIX goes, the more bullish the stock market is going to become. Low fear means we're more than likely going to continue to see all-time highs, and I've been saying that for over 3 weeks now, and we continue to see all-time highs. So the VIX is telling us that the fear is gone, and continue to expect to see this market going higher. We need to see the VIX getting back into the 20s before we see any volatile selling and a possible stock market correction. With the VIX below 18, it's going to remain a strong bull trend, and we're going to continue to grind higher. On gold, we finally saw that bullish breakout, and we did get a close back above the 50 EMA, and we blasted through that first price target at 1761. The next price target to watch is 1776, and above there we have quite a nice run up to the next price target at 1826. It does look like gold is trying to go back into a bull market, but it needs the price action to stay above the 50 EMA right around 1758. You can see the moving averages are getting stacked to the bull side, and now the next step is for them to try to cross back above the 50 EMA. The 50 EMA is no longer negatively sloping, and it looks like it's trying to roll over and go back to a positive sloping EMA. Silver is also joining the rally, and it did close back above the 50 EMA today, and all these moving averages are trying to go back into a bull trend. The next price target on silver is above at 2655, with downside support at the 50 EMA at 2560 and the 20 simple moving average at 2511. On Bitcoin, we're hanging around that price target at 64,000, and we can't break above there just yet. It does look like we're getting some nice consolidation of that breakout, and we are still maintaining a bullish trend with bullish price action. We still don't see a ton of volume coming in for Bitcoin, but as long as the price action continues to go higher, that's just fine. We see the rest of the indices climbing up with low volume, and they're just continuing to grind higher to all-time highs. So as long as Bitcoin has a bullish trend and bullish price action, we're going to give it benefit of the doubt. The next price target above is 64,000, which we did already meet. But if we do break above that level, we could easily go to the next price target above at $67,850 and $70,000. The critical downside supports for Bitcoin are going to be $59,000 and the 50 EMA at $55,000. Remember, for a Bitcoin correction to take place, we would need to get a price action close below the 50 EMA, which is now sitting here at $55,000. On Amazon, we went up 1.38% today and closed right on top of that resistance trend line, which means we're still trying to break out on Amazon. If Amazon can break out, it's going to likely retest the previous daily high at 34.42, and a break above that means Amazon is likely going to all-time highs, and it's going to go into a strong bull run. You can see we're going to get a crossover of the 20 simple moving average crossing above the 50 EMA as soon as tomorrow, which means all of the moving averages will be fully stacked to the bull side, and we already have very bullish price action. So Amazon is without a doubt going full bull, and it just needs to break through 2 more levels, and then it's off for the races to brand new all-time highs. Downside support levels are going to be 32.97, the resistance breakout at 32.60, and then we're looking at 32.22 below there. On Tesla, we went up 0.9% today, and we continue to close above all of the moving averages while we continue to slowly build up a bullish trend. Downside support levels are going to be the breakout at 719, the gap close at 704, and the most critical support is now the 50 EMA at 695. Remember, Tesla needs to stay above the 50 EMA so this bullish trend can build up, and it will then have the benefit of a bullish trend to push the price action higher. Upside resistance is going to be 762, the resistance trend line at 772, and the next price target is all the way up here at 802. So Tesla does look like it's trying to go back into a bull market, so you can start to make bullish trades on Tesla, knowing that your risk is defined by a close below the 50 EMA at 695. On Apple stock, we went up 1.87% today and blasted right through that price target again at 134. We're close to going into a full bull trend. We just need the 20 simple to cross back above the 50 EMA. Downside support is going to be 130, the gap close at 128, and the most critical support is the 50 EMA around 127. Apple definitely looks like it's going back into a bull market, and the next price target above is at 137. On the financial sector, we were flat for the day, going down about 0.09%, still closing above the 5 EMA and still maintaining a bullish trend. On the industrials, we went up 0.4% today, closing above the 5 EMA and still maintaining this really nice bullish trend. The healthcare sector finally broke out today, going up over 1.7% and blasting through that resistance level above. We see a very strong bullish candle closing well above the 5 EMA, and the bullish trend is only picking up momentum, which means healthcare sector is likely going back into a strong bull market. On the energy sector, we definitely see energy as the laggard, and we see energy going down today 0.81%. It's still closing above the 5 EMA, but we need the price action to get back above the 20 simple moving average and all of these moving averages to stack back to the bull side. The energy sector could be the next best sector before it breaks out, so pay attention to it very closely because it could be getting ready to go back into a bull market. So going back to the S&P 500, you can still see that we have bullish sectors across the board, and the only sector lagging is the energy sector, which has the least amount of weight in the S&P 500. The VIX continues to go lower, which means there's no more fear left in this market, but we are getting into very critical price targets above. So as we get to these price targets, just remember to get a little more defensive because it is possible one of these levels will trigger a correction or at least a pullback. Remember, a pullback is not a correction, it's about a 1.5 to 3% drop, and we should get one more leg higher before the real stock market correction. Remember to continue to enjoy this bull market and look for trade ideas that are not at all-time highs so that you can define your risk at better support levels. I'm putting brand new trade ideas weekly on the Stocks Channel Discord, and they are absolutely crushing it. Recent trade ideas like AMD and DraftKings are absolutely crushing it, and we continue to make money in this market without having to trade the indices at all-time highs. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So next up, let's check in on our trade idea Shopify, and we see Shopify going up 2.41% today. We did get a retest of that 5 EMA, and we did get a bouncing close back above that level. So just like with a lot of these other stocks, as long as we continue to close back above the 50 EMA and slowly but surely build up these bullish trends, we're getting closer and closer to see these stocks going back into a bull market. So Shopify is doing everything it needs to do on the price action end as the trend continues to build up back to bullish. The 13 EMA is getting ready to cross back above the 50, and then we'll just be waiting for the 20 simple moving average to get back above the 50 EMA as well. Upside price targets, which are very likely going to be met in the very near future, are up here at 1260, 1316, and 1360. The best buying opportunity for Shopify is going to be if you can get it off of the 50 EMA right around 1179 or the 20 simple moving average at 1146. Remember, if we're going back into a bull market, it's very unlikely you're going to see these lower buy targets that we've already triggered and we've already bought Shopify from. So if you're getting aggressive on Shopify, you're going to look for buying as new support levels as old price targets. So you could try to buy Shopify off these old price targets, but just understand your risk is still defined by a close below the 50 EMA at 1179. So we're going to continue to cover Shopify until we get all of these price targets met, and I'm going to help you stay on the right side of this trade the entire time. Remember, there's more trade ideas weekly on the Stocks Channel Discord, and you can find out how to join the Discord community by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.